Adil Shetty, the Chief Executive Officer of BankBazaar.com, joining me. Adil, thanks so much for taking the time and pleasure speaking with you as always. We were just speaking with the CIO of fixed income at Mirae Asset, and he was saying that he anticipates there could be another rate cut and then a pause for quite a while. So from that perspective, what does that mean for fixed deposits first? And the context is that on Friday, I was speaking to the Managing Director of State Bank of India, and he was saying that there's not too much room to bring deposit rates down further. So that's a pretty telling statement. Would you agree?
I would agree. You know, if we look at fixed deposits today, they're in the range, right? And there'll obviously be some better, some worse, but the range is in that 6.5% to 7%, depending on, you know, the tenor. Now, given that the repo rate might be cut further, I think people who are in a conservative position where they're in fixed deposits are starting to think about, should I, think about a debt mutual fund to get a slightly better return? Or if I can lock in a good rate now, right? So while the range is 6.5 to 7, you might find a private bank or a small finance bank, which is even higher. People are asking us at Bank Bazaar, shall I lock in, a 7.2% now for 3 years so I don't have to worry when the rates get cut? But I think that there is a thought process amongst consumers that FD rates have come down significantly in the last year, over 1%, and they might go down a little bit more.
They might go down even more. So, but the tendency is, Adil, at the end of a rate cutting cycle, to be a little bit more conservative with the duration that you get into. To put things simply, if at the peak of the rate cycle, when the rates are at their highest, where a lot of people go out and say, maybe you should get a 5-year fixed deposit. That's not something that you would say now, because you're worried that it could change in the next 1.5 years, and then you're locked at 7.2%. What is the advice that you're right now dispensing to people?
So your point is valid. I think the lock-in advice makes sense. Like, for example, someone older in my family will say that I only want to do fixed deposit, right? So that's the instrument where I know that, there's a certain 5 lakh guaranteed by the government of India. No bank has ever not returned its fixed deposits since independence. So it's the advice for people who say, I want to do only FD. But let's say someone, Alex, was young, right? Like you and me. I would say that, think about moving your money to a debt mutual fund. Now, the importance of debt mutual fund is actually that the effective tax rate is the same, but your tax becomes incident only when you sell the unit. And invariably what happens is you sell your unit much, much later because, a unit contains both capital and interest. I'm being a little technical, but the main takeaway, right, is you'll be in a situation where effectively you can cut your tax rate by half if you do a debt mutual fund. And there are multiple reasonably safe options out there, which you were just talking about, Alex.
Yeah, that makes a lot of sense. And by the way, the third option for those that can move a little further down in that risk metric or risk ladder, you can look at hybrid mutual funds as well, which are combination of equity and fixed income or equity and debt. But let's move to the loan side, because you're saying at this point it makes a lot of sense to move beyond fixed deposits, and that point is well made. But let's talk about home loans, right? Again, I was speaking to the Managing Director of State Bank of India, and he was saying that more than half of the loans in the system have now moved to the repo linked or the external benchmark linked loans, which means that the reset is very quick. Is that something that you witnessed as well?
So, Alex, there's some fabulous products out there. I have seen a reset which is T+1. So T+1 means that on Friday, the RBI cut the repo rate, and in the next day, right, my EMI can go down. But that being said, right, these are new innovative products. Most people are on a reset which is anywhere between 1 to 3 months. So there's something called a reset cycle, which you have to check in your loan agreement. No one else can just tell you. And what we tell people is my reset, 3-month reset might be 1 month from now. Some other people might be 3 months from now, right? But I want to catch on something you just mentioned, right? There are still a lot of people, Alex. There's still a lot of people out there who are not on a repo rate, right? And let's talk about what current rates are. You know, the home loan rates are typically about 1% above a standard FD rate. So if the standard FD rate is 6.5 to 7, right, a home loan is, let's say, 7.5 to 8. There are best home loans, and again, at Bank Bazaar, we say check your credit score, keep it above 800. But let's say there's someone out there offering a home loan for a particular high score type of consumer at 7.3%. We're at that stage where you can get a 7.5% in the market. I know it because I have a 7.5% home loan, but it's going to start inching towards 7. If you're on a MCLR, if you're paying much more than the numbers I'm quoting, right, you should seriously be thinking about a refi, either with your own bank or with a new bank.
And how do you do that? You can approach your bank and you can ask them to reprice your loan. You will have to pay a percentage of the balance that is remaining, right, in order to facilitate this?
Right. Okay. Let me answer this directly. If you approach your own bank, they have a simple 2-page process to convert your loan within the existing bank. But the reason the process is simple, right, is that they already have done your valuation. They're holding all your land documents. They don't need to repeat anything again. So they'll charge you a fee, right? So the fee could be something nominal like 10,000 rupees, or it could be 0.2% of your loan. And every bank is different. So it's important that you either go to your bank website or you check on a online marketplace and you figure it out, right? So that's if you go with your existing bank. But sometimes what might happen is you find out that a new bank is offering you a better rate, right? Once you've checked on Bank Bazaar or a different platform. And there what you can do, right, is you talk to the new bank and they'll say, I have to do your valuation, I have to do your documentation, and they'll charge you a processing fee. Now, on average, right, a processing fee can be as high as 0.5%, or it can be capped at, 15,000. Every single bank is different. But if you are on a MCLR, if you're paying, let's say, more than 8% or even 7.75%, I think please do the research. Just that one action, Alex, after watching your show, can save you lakhs of rupees.
Yeah.
I'm not talking about saving 5,000 rupees on a cell phone on e-commerce. I'm talking about saving lakhs of rupees on a 20-year loan by taking some time off.
Yeah, particularly if you have a situation where for at least 1 year or 1.5 years, you could have these prevailing rates, either 25 basis points lower than this or at this level if it is prolonged, the pause. Adil, thanks so much for taking the time and for speaking to us. I think this is very useful information that a lot of people can use. All right, let's talk about that last aspect. And Adil mentioned debt mutual funds as well that you should consider as an alternative to fixed deposits, particularly because you can defer the tax incidence. What that means is that in a fixed deposit, the interest that you earn hits your bank account and you're paying tax on that. In a debt mutual fund or any other type of mutual fund, you will only pay tax when you redeem the units and you book the profits. So that's something to bear in mind, and that's why a lot of people say that despite the tax treatment of debt mutual funds and fixed deposits being the same, debt mutual funds from a tax perspective might actually be better, notwithstanding the returns also being better in several cases.